Hello, everyone. Welcome to the Wall Street Blockchain Alliance's Crypto Roundup for Friday, October 24th, 2025. On this wonderful fall day, Ron Quaranta here with my good friend David Brill. David, I've got a couple of cups of coffee into me by now. It's good to see you. We had our event last night. We've got lots to talk about. We'll keep it a tight 30, but for everyone who's joining us, thank you so much for watching LinkedIn Live, YouTube, X. Before we begin, our usual disclaimers, please keep in mind nothing discussed is accounting, legal, tax, or investment advice. And really what David and I are talking about are our own personal opinions, not necessarily the opinions of our firms. David Brill, the WSBA Crypto and Blockchain Summit 2025 wrapped up yesterday. I thought it was a great time. Would love to hear your thoughts, and we've got news to cover as well.
Yeah, look, I thought it was great. I thought we had a lot of quality speakers. We covered a lot of ground. I particularly enjoyed our first, session on the legislative side and those updates. Of course, liked our session where we got to talk markets and some of the regulatory headwinds or opportunities we have coming forward. Tokenization event was really interesting, and getting to talk with when I moderated the panel, that was a lot of fun.
Yep, and I think we have the one, the only Ashley Klayman joining us.
There
Good
she
morning,
is.
Josh.
Hi, how are you?
We're good. We just kicked off, and again, thank you for everyone in the audience. Josh, thanks for joining us. We were talking about last night's event. I was pretty busted up at the end of the day. It was a long day for everybody, I think. Josh, would love your opinions, and David, Josh, as you both know, any panel you are both on is obviously the most popular panel given event. But Josh, you did another fantastic job kind of moderating all of the legal minds there. Would love your perspectives on the day, on the event, and I've got some thoughts as well. It was really interesting to get some of the people's perspective.
Yeah, so I just want to say kudos to you guys for organizing, first of all, and also for an amazing panel. So I really enjoyed your panel as well. It covered all kinds. Maybe you guys can talk about that after I talk about the legal and regulatory. Yep. So the legal and regulatory, they made it easy for me. So we had Renato from Paul Hastings, we had Jason from Morrison Cohen, we had Lewis from Cahill, we had Alexandra from Steptoe. I think that's all, and me. And yeah, so imagine like all these great minds that it made it so easy for me. I could just be like, so what do you think of this? What do you think of that? And there was debate, there was interesting alpha shared. Yeah, it was just, I don't know. I'm really thankful to everyone on the panel for doing such a great job. And
Josh,
your panel.
Well, Josh, I wanted to ask you about the legal panel, and David, I wanted to ask you noticed this as well. And one of the comments I got from a lot of the people who attended, and for you both know this, for everyone in the audience, everyone who attended are experts, have deep expertise in their particular verticals and in their particular roles, and in many instances have been involved in crypto and blockchain for the better part of a decade. But Josh, I'm always surprised when you've got these legal minds. There's such a divergence of opinion on certain things. 100%. And hearing both of those opinions is so educational, but it makes me ask the question, when a non-lawyer looks at law and says, well, everyone should have the same answer, people have different answers. And it was stunning to me how well considered those positions are.
Yeah, for real. And I would say it's a variety of things. Well, one, it's a worldview thing, right? You have certain philosophical thoughts, right, which may or may not gel with the law. You have people who are litigators or regulatory lawyers or deal lawyers, or some combination of the above, all of which makes for a very different analytical approach.
Right.
Right? Like if you're structuring a deal, you don't want it to end up in litigation. If you're litigating a point, you want to win, right? And so it's it's just very, very interesting. And I think also looking at the different sources, not just of information, but areas of law and how that has an effect. But I think this is how, like, when I'm glad that it was so well explained, because a lot of times people get frustrated when lawyers say it depends.
Yeah.
But it really does depend in a lot of instances, unless there's like literally something directly on point with designed with that in mind. I did think it was very interesting though when we were looking at some of the, for those who weren't watching, and I won't go into the details because of course it was Chatham House rules, but you know, we were celebrating some of the wins and also looking at some of the gap areas and challenge areas, and also discussing the flash crash and some other sorts of things and implications from that. And I don't know, I think it, when discussing the gaps, what's so interesting is that while we can say, yes, it appears that there is a gap here, to your point, Ron, how to close that gap or what the solution should be or all these sort of things, you know, people have very different views, which may be something completely different from their view of what the law actually says. And I think that's when we get into the whole, not lobbying, but, you know, like, because we're not a lobbying organization, nor are any of these law firms or David's employer either. But you can see how in Congress or somewhere else, you have people talking to this one saying like, hey, this is how the world should look. And someone here saying, I don't think so.
Yeah. Josh, to that point, and shout out to Namaj, who's watching us. Insightful. Yes, David and Josh are always insightful. Thank you for watching. But Josh, to that one point, I will share with both of you some commentary from attendees who were not attorneys but had listened into the legislative and regulatory panel. And you had said something just now that was interesting. We often hear it depends from lawyers, and so many of them got it in a way they didn't get it before listening to that panel, which was when a lawyer says it depends, that's for the benefit of the client and for the benefit of what you're trying to accomplish for the industry. And so many brains just kind of clicked when you all spoke about that. So it was really fascinating to watch. David, you know, when you and I, there's a lot more legal and legislative stuff, Josh, we're going to be talking about as well. David, I have to apologize. When you and I did panel number 2, I immediately started talking about, let's talk macro, let's talk markets. Josh, we were looking for you in the audience because I think at one point I said risk on. But David, you know, it was interesting because it was the two of us and Kayvon from a legal perspective, but it was really interesting to me because you and I often have the macro conversation. We often have the markets conversation with Josh as well. The kind of intersection of the stuff that Kayvon does to that kind of macro environment was fascinating to me. And candidly, I almost didn't expect it. I almost felt like, why am I bothering this poor expert attorney on this? And he was right there with some of the market stuff we were talking about.
Yeah, look, I mean, I have the good fortune of having the legal background. And so like I travel both areas, you know, consistently. But yes, Kayvon is really, you know, he really follows his clients and he understands their business models, and he's, you know, is very aware. And as you probably remember, he and I have gone and, you know, and spoken to senators and representatives about blockchain crypto like 7 or 8 years ago. So, no, I thought he brought an interesting perspective. And I know he always likes to counterpoint me a little bit, even when he agrees with me. So it's a little fun to have that too.
And just for those at home or at the office, we're talking about Kayvon Siddiqui of Jenner. And yes, I double click. Kayvon is amazing. I've worked with him at 2 different firms. And yeah, I can tell you, in addition to being a great knowledge about, you know, economics and markets, I recall being at a firm a decade ago where we were doing a presentation on Merkle trees.
Oh my God.
Wow. The way back machine.
That's hardcore even back then. Josh, David, appreciate that. You know, from the other panel perspective, for the folks in the audience who might not have watched it, we had, just to recap very briefly, we had a panel on banking and kind of how banking evolves. We had a panel rather on tokenization. David, Josh, the other thing I learned throughout the event, aside from how deep the expertise is of members and colleagues that were there, is that tokenization, David, is actually turning out to be a lot harder than people thought and might take a lot longer. Did I get that correctly in your perspective, or did I see it wrong?
No, I totally agree. If it was so easy to take illiquid assets and make them liquid, it would have been done a long time ago.
Right.
So, I think it's easier perhaps in Europe and Asia. They don't have accredited investors, and there's different constructs. But here it's difficult. But we're working like with a few clients right now, and we're coming up with innovative ways for them to tokenize these assets. I think the issue again is the secondary markets. And there's a lot of custody issues of the token and accounting for the tokens. And somebody brought up a good point about like, well, who's going to make sure that those properties that are being tokenized actually exist, and that these tokens actually give you the rights that they say they do. So, it's an evolving industry. Adam Goldberg from Figure was there, and Figure's doing a lot of work with HELOC loans, and he managed to tokenize that. But it's evolving in a good way. But yeah, there's still some thorny issues to work out.
Yep. And the other part of that was this kind of institutional evolution. I feel like I use the word institution a lot. And I wish I could shout out every name of every attendee and panelist, but we had folks from Robinhood there. We had folks from Block there. And it really, David, Josh, was this permeation in the world that we know of payments and banking and trading and all of this stuff really beginning to evolve. David, you and I could not have had the conversation about banking just last evening 10 years ago or even 5 years ago that we were able to have in the wake of some of the innovations that we've seen.
Yeah. And, having that being able to moderate the panel with, people from Robinhood and S&P and, Brian as well. It was really interesting. I think people got a lot of alpha and also got a lot of I think moderating, I just sort of went off script and asked the questions I thought people in the audience wanted to hear.
Yeah.
And I think people appreciated that. And we got some answers to some interesting questions that were very timely.
I want to point out for the audience, everyone that's watching, what troopers David and Josh are. David intervened on my behalf because I was losing my voice and moderated one of the panels like the expert that he is. And Josh, I'm just going to say it at this point, you moderate full panels of lawyers without notes. I didn't catch a single note you looked at.
Well, like I said, people make it so easy. Like if you know what's going on in the market and you've got an all-star panel, right? And it writes itself, or it speaks itself. I don't know what the right words would be, but yeah. No, I mean, thank you for that.
Well, yeah. Well, as a fellow, as a colleague that joined us to moderate one of the panels, who shall remain nameless, he said, these panelists, you can just kind of wind them up and let them go, and it's the easiest job in the world. Yeah. David, Josh, talking about the markets, obviously, aside from us paneling and having these wonderful conversations yesterday, I don't know about the two of you, but of course I kept getting the alerts on price moves. A little bit of a down day yesterday. David, some economic data came in. Inflation came in lower than expected, stuck around 3%. The three of us are going to have a deep conversation on what real inflation numbers are. But it looks like we've got a little bit of a rebound building, David, particularly on news of JP Morgan, who came up in conversation yesterday, as well as the other big money center banks, allowing Bitcoin and ETH to be used for collateral coming up. David, what are you seeing in the price movement? Have markets settled down enough for them to be building off of support?
The markets, it's interesting. I think there's a lot of bullish sentiment, but the markets aren't really expressing that right now. Bless you. And there's a lot of correlation, bless you, that, the money's moving from gold or, it's going back to gold. And so I think we're sort of staying flat at these levels. It's very interesting, though, because I think we're at a kind of an inflection point. I think October hasn't happened the way people wanted. Yeah. And, I think right now we're in a range where we could either go back up towards all-time highs or maybe revisit 100K, which I think would give a lot of people heartburn. Ooh. Yeah, I think that would give a lot of people heartburn. But there are a lot of, I won't go into detail, but there are a lot of trends, both on like a Fibonacci level and on technical analysis level that, if we can't break through 112,000, then we could go back down to 100.
Yep. David, Josh, I want to just look at a comment from Namaj, who's watching. As a student, I have a question about the panel. What does WSBA think about corrupt governments adopting blockchain policy? Let me stop there because Josh and David, to reiterate for everyone watching, obviously everything we're discussing really is our own personal opinion, not necessarily the opinion of the WSBA or of our respective firms. I'm not sure if I get the specifics of the question, David, Josh, maybe you do, but I think one of the things that gets lost, and this came up yesterday, Josh and David, that when you look at blockchain technology and the capabilities that enable it, including crypto, they represent a powerful set of tools to enable things like monitoring of sanctions, to enable things like proper law enforcement and tracking as well. So when I see some of these commentaries, it really asks the question of, does the market realize, or enough of the global market realize, blockchain and crypto allows for real tracking of some of the issues we're seeing, correct?
Yes, it does. And I think there's still, sort of a chasm of understanding of, what things are and how things work, how it is much easier to launder, you're much better laundering cash than trying to launder crypto because there's a trail with crypto. And maybe people don't know who the wallet address belongs to right away, but there are a lot of smart people who have the analytics, including people at my firm, to figure these things out. So, and I'll give you another example. As we all know, CZ was pardoned yesterday by President Trump, and there was a lot of commentary around that. But then you go on X today, and Elizabeth Warren is saying that CZ was a convicted money launderer who got a pardon, and that's not right. There were BSA AML violations.
Incorrect.
What did you say?
Factually incorrect, just to be clear.
Factually incorrect. And, she got community noted on that. But I think the more important thing is that, there needs to be an understanding. And I think her tweet, unfortunately, is another example of, Binance had some BSA AML issues about, their policies around BSA AML, but, CZ was not, accused or did not plead to any kind of money laundering charge. And those are two very different things. And I think one other thing I want to say is that the type of violation that CZ pled guilty to, no one else has ever been put in jail for that type of violation.
Yep.
So I think that, there just needs to be a broader understanding. And I think it's really important that, especially our Congress people have a full understanding of what's going on and speak about it correctly.
Yeah, and look, we always say this, right? Our members and our colleagues say this. So just check the facts, know what it is we're dealing with, and what we're talking about. David, Josh, I want to raise one more thing for the audience, just so that they're aware. And we joked about it yesterday. I think we've said so many times on this broadcast, we're ripping up the script and just totally going off topic. I don't know if you both noticed this. It got flagged to me during the cocktail reception. Every panel just ripped up the scripts and just went in 100 different and important critical ways, which was really, really fascinating. David, I'm going to raise one more thing for you. We sort of alluded to it on the panel about markets yesterday. And you and I have been swapping text messages. Josh is on every one of those, and she's probably got 500 unreads. Josh, I got to ask the question, do you just shut off notifications like in the morning so you don't see these from us?
No, I just sort of, I think often I batch them.
That's wise. David, where I'm going with this, is really building on something we discussed yesterday, which is there seems to be this rotation out of gold a little bit. Gold down 10% now in the past 3 or 4 days, or at the 4,000 level, we're at over 4,400. Some of that rotation seems to be going predominantly into Bitcoin. David, I'm going to ask the question, are altcoins done?
I don't think altcoins are done by any stretch. I do think people have been waiting for this sort of altcoin rally because they've been beaten up so much. But we need to remember that these treasury companies have put a lot of money into altcoins. And so there's been a lot of money put into the big cap altcoin. So I might ask the question, are the smaller altcoin rally, is that done, or is that going to revisit? But my feeling is that as we see a Bitcoin rally and we surpass all-time highs later on this year, possibly, that, as people take profit in Bitcoin, hitting an all-time high, they'll roll into ETH or they'll roll into some of the other altcoins.
Yeah.
So I don't think it's done, but I think it's definitely delayed. And I think there are a lot of people who are sort of counting on it happening. But I think the combination of that flash crash where we lost 380 billion of market value took out a lot of players and a lot of leverage. And it's sort of people are licking their chops a little bit and sort of taking a moment and a pause. And I think the market's taking a pause too.
Do you think the kind of leveraging has it washed out enough, or do you think there's more to come? And again, not predicting, but there's a lot of money out there.
Yeah, I don't think it's been washed out, but I think people are learning some lessons.
Yeah.
And we have to remember too, it's not that the people who are leveraged longs who got, lost their collateral. There are people who are on the right side of the trade whose trades got stopped out because the collateral, the collateral wasn't handled properly. They couldn't reconcile the positions. And, we had, again, I don't want to attribute anything, but we had some insightful thoughts shared by our Robinhood panelist about how, Robinhood sort of thinks about it on a macro level, and how it handles these type of situations. And I thought that was really an insightful conversation we had to share with the audience.
Yeah. Josh, when the Klayman family office looks at what's going on in the marketplace, I'd love your thoughts and perspectives on it. And I actually think we're under Chatham House rule, obviously, but some of these topics were even addressed on your panel as well, if I recall correctly. Would love your perspectives on it.
Yeah, thank you. Ron, I would like to say that you mentioned that I can do moderating with no notes. I would say you're kind of the master of this, and like as evidenced by our ripping up the script every week.
Every week.
And your quick one-liners. So yeah, I mean, what I would say is with the flash crash, I mean, the one way to look at it, well, there's a lot of different ways to look at it. I mean, I think we're still finding out information about it. Right. But we could say in a different market, could the prices have gone down and stayed down much further? Yeah, right. Yeah. We're still up pretty high. Like if you think about what is our worst case scenario, not investment advice, but our worst case scenario is that Bitcoin goes to 100. Yeah. Like a year ago, would that have been our worst case? No. And right. I think the altcoins generally rebounded pretty well from where they were. They might not be going up, but some of them went to like a penny, and then they've rebounded. So I do think whatever, we might not have the same tailwinds necessarily at this moment that we would have hoped for, as David puts it, October. But at least it's not like, I mean, it's a far cry from where we were, knock on wood, in 2022 in November, right? And let's hope it stays that way. Although, let me say, sorry, go ahead.
No, go ahead.
One thing that someone forwarded me today, I hadn't seen it yet before this, was, although I guess it came out yesterday, was about Fortress Trust and an insolvency, right? Nevada Holding Fortress Trust. So I do wonder whether out of that flash crash, at least there have been rumblings at times on X about, that there could be some who were affected by it that we just don't know yet. But holding that aside, I guess one last thing I'll say, then I will say it, is something that did come up on the panel, because we did discuss the flash crash and some implications. Without attribution, I think, or without specifics, some of the interesting things we talked about really were, well, what expectations should we have for who can, like in a DeFi context? And actually DeFi handled things quite well, right? The auto liquidations worked. Now, whether they worked from a perspective of what we want to happen is one thing, like meaning in the market, but they did work, and they held up well, at least as reported. But a question about do people really understand what it means? Does the person off of the street understand what it means to have leverage and to have, what the implications will be? And yes, some people have said, well, if something was 10x levered, fine. But something could have been 2x levered. And if it goes to a penny, then you kind of like, yeah. So I do think, it's just an interesting question, but it's not a question that's unique to crypto. It's just, we're exploring new areas of the market and new ways to do things. And so some of the same, I guess, questions come up.
There's so much there to unpack, Josh. A lot of that was covered in the panel. David, Josh kind of alludes to an interesting point. We talked a little bit about this at that panel and throughout the day. David, I want to ask a question that might be a little more, again, provocative than I want it to be. Are we looking at, leaving crypto aside or as part of the general dialogue, are we looking at a world where the boundary between gambling and investing and trading is becoming more and more nebulous? And is that why we're seeing 1x, 2x, 10x, 100x in some venues overseas in leverage?
That's a great question. I mean, one could always say that, trading with leverage is gambling, but, it's sort of thoughtful gambling. I kind of view it as different flavors. I do think that the prediction markets are gambling. And I think they're fascinating. I was speaking to Renato about it after the sessions, and he works with some companies that do prediction market work, and I think it's fascinating. But look, I think part of this is basic kind of numbers. Like Ether is, around 4,000, Bitcoin's around 110,000. People feel like if they have a view on a position with one of those, that they need to use leverage. Otherwise, you need $11 million to buy 100 Bitcoin. It's hard to, make a move with, with those kind of prices. So I think there's some of that. And I think that if you can pick an altcoin at the right time, you can see some really explosive gains. So there is some gambling in the market. I just think that these flushes, although very unwelcome, are just a reminder that you have to be careful when you're playing with leverage.
It's a good point. And Josh, you kind of wove this into the conversation as well. And I want to bring up the topic of disclosure, which is interesting, because when we talk about disclosure and we look at risk assets, there are disclosures that are required by regulation in the United States. And we often hear this call for, well, there needs to be more disclosure about leverage. Pick a topic in the crypto world, pick a topic in the private markets world, David, by that example. But Josh, I guess my concern is no one's defined what that disclosure needs to be. And the question becomes, what should it be?
I mean, I think that's a great question. And I do think, something that came up yesterday was, a hypothetical question of like, when was the last time you bought stock and you read an S1 that you hadn't worked on, or you didn't represent the company, or you didn't have an interest in something, or you just read it? And I think, that really hits the point home. Similarly, when people say they want to buy a particular token, are they really reading the white paper? Now, maybe if you're an early investor, right? Like if you are a seed investor or something like that, maybe you are, right? Because maybe you're like, I need to know this team, everything else. But at a certain point, if you're on a trading platform, are you doing that before you say, hey, just buy me some ETH, right? And at this point, does the white paper matter? Right? So yeah, I think it's a really interesting question. I do think, and reasonable minds may vary on this, including about what could even be put somewhere, right? But I do think, if in my world of what seems like if I were creating something not tied to any technology or law, okay?
Yeah.
So just putting it that way.
Yep.
I might say in plain English, if you do this and this happens, this is what happens. Just like somewhere directly before someone does something saying, are you sure you want to do this? Like you could lose everything if the price varies, like if, something like that, just like a warning. And I'm not saying that warnings don't exist. They probably do, or there probably are disclosed somewhere. But to me, for some of the more fundamental questions about what does it mean to lever up?
Yeah.
That's different from disclosure of like, I work on risk factors for certain companies in crypto, and it's kind of broad brush a lot. Like it's not saying like if you push this button,
right, the world blows up. No, Josh, I mean the disclosure conversation is important. Go ahead, Josh. I'm so sorry.
I'm just blathering on today. So I will cease. But I guess what I was going to say is it's one thing to say something like, do not invest more than you are okay with losing. You could lose your entire investment, versus saying like, this is what it means if you do 10x leverage. And if the price varies by this, you're probably going to lose not this, but also this.
Yeah.
You know?
Josh, it's a good point. And David, when we talk about disclosure, and that came up yesterday as well, I want to ask a different question, David, because I wonder how much of this gets alleviated. And you've brought this up wisely years ago, changing the accredited investor rules.
Yeah.
If those evolve, how much of this problem has at least some sort of a solution?
Well, look, I think it's really important that all investors have access, or at least the majority of them have access to these products that other, accredited institutional investors have had access to. But I do, when it comes to leverage and the amount of leverage people use, I do wonder, do we need to put some lines in there? Really, and I'm not a believer in sort of this paternalistic view that the government needs to protect people from doing what they want to do, but I do agree with Josh that there should be a little bit of that disclosure. And I'll tell you, when I was working at Voyager, we were working on, really having like disclosures in addition to the ones we had, but just really laying out how buying works and some of the risks associated with it, besides what was in our public filings. And we just didn't get to finish those. But I do think there may be some middle ground with some plain English disclosures that could be really helpful for people in crypto.
David, the one other thing I would add to that, and I'd like your collective, both you and Josh, opinion on this. When we talk about those disclosures, why is it okay in certain industries to self-certify or self-disclose, and that even on, for things you do on the internet, and that's okay? And I'll give you an example, not a parallel example. There are wide differences. Go to a website somewhere where you can buy wine. Are you 21 or over? Yes or no? You just hit yes. You've now self-certified. Now I know it's not the same example, and I know they're very different things, but wouldn't in some way that level of self-certification apply here, or is that just too simplistic a view?
I don't think it's simplistic, Ron. I just don't think buying the wine is sort of, you can buy a certain amount of wine and you're going to get, you buy 5 bottles, you're going to get 5 bottles of red or white or champagne or whatever you're ordering. I think when it comes to potential for losing significant amounts of money, I think that's where the difference is, and where it might be unanticipated losses of significant amount of money.
I said it might be a stupid comment, David. Go ahead,
No,
Josh.
it's not a stupid comment at all. I mean, it's actually in practice, advising certain platforms about click-throughs, right? About like what kind of things someone needs to get before they get to see certain offerings or see certain documents. Not even necessarily related to crypto, but separate, right? More traditional funds, like if you think about that. And I think a couple of things. One is, if you are going on the internet, right? Well, I sound like I'm ancient saying going on the internet. If
you're going to use your AOL dial-up to go on the internet.
Exactly. Mom, get off the line. But yeah. So if you're out there and you want to engage in some kind of activity, right? And there's a platform, and it's saying, hypothetically, say it says, do you understand the risks here? You understand that you could lose everything? Or are you a sophisticated investor? Or are you this? Are you that? I mean, if you really want to get it done, are you going to be like, first of all, okay, if you are not experienced in this area at all, say you're just like a kid, hypothetically.
Yep.
This is all hypothetical. And you see something and say it says talking about sophistication. Mm-hmm. You might not even know what a sophisticated investor is, but you're like, well, I'm sophisticated. I'm just thinking of all sorts of things that reasons for which, it's a good stopping point, but it's not all the way. But then again, I also think of this as opposed to just having, self-certification is important, and reps in certain instances can be required for stuff like if you're doing, certain offerings. But if you think about a wet floor in a public area, do you have to make it dry? Do you have to or is it enough to put a wet floor sign conspicuously there, right? Where everyone can see that floor is wet. You can walk on it, but that floor is wet. And I feel like that's why I think something that is plain English, just philosophically, again, not tied to the law or to any existing technology, that just says if this happens, you could, lose
Get hurt.
not even your initial investment, Yeah. So I think something like that, because when you see the yellow floor sign, you could choose to walk there or not.
The wet floor example actually is really clear. I got that implicitly, Josh. Thank you very much. We've got a little bit of time left, and I know we went slightly over, and I keep saying we're going to keep it tight. And David, I keep blowing that up because there's so much to talk about. I'd love to go back to something else, Josh. I think you might have referenced a bit earlier, and I think you got referenced throughout our discussions yesterday. And we've referenced this in the past. Josh, you said DeFi worked. It operationally did what it needed to do. And David, you and I have talked about this. There's something about programmatic operations done appropriately when they function. You know where I'm going with this. I'm talking about AMMs, for example.
Yeah.
There's almost an elegance to this automatically happened. And when we say that in context, the three of us and people at the event and people who've been in the crypto world for a long time realize, yeah, that makes sense, but we need to have some protections, whatever it may be. When you look at the rest of the world and you describe this, they look at you like you're out of your mind, right? Like it suddenly becomes like, oh my God, how can you do this? And I try to explain, Josh, I sometimes say, well, no, that's how it's designed to work. Whether or not we like it, caveat emptor, be careful whether you get engaged with this. David, why is that conversation so hard?
That's a good question. I think one thing that happens is that the volatility in crypto, the sheer volatility and the sheer movements are just so dramatic sometimes compared to equities that it just has a different kind of effect. Yeah. Like even when you see a big sell-off, like stocks may sell at 5, 6, maybe 10, 12%, but you don't see things move 40, 50, 55%. So I think it's just so dramatic. Yeah. And I think there are ways where, in the equities world, you have a chance, you could put more collateral in, things don't clear right away. There's just opportunities to put little speed bumps in for people to protect their positions, where sometimes our crypto ecosystem isn't working perfectly, where, your collateral gets rebalanced negatively, or you can't put in more of a more stable currency in time. And so I think that's a part of it. It's a feature and a bug.
Yeah.
But the feature is that it works, programmatically, and it works great. The bug is that you don't get some of the speed bumps that you have in traditional markets to protect things if you are really levered.
Yeah. So that, Josh, go ahead, Josh.
No, I was going to say, yeah, it's very cold, right? It's like mercenary in a way.
Yeah.
I mean, meaning like, not, I don't mean that in a negative. I just mean
robotic.
Like it's unfeeling. It's robotic. That's what I mean. Right. It's robotic. Right. And it harkens back, like if you think about the original, like the DAO.
Yes.
Like vulnerability, right? And what happened with that. And yes, as Greg Murphy just said, the human element is removed.
Yep.
Yes. So if you think what happened there, right? And people, many in the Bitcoin community, right? They were like, oh, we never would have forked, right? In the event of that, because we just live by the code, right? And somebody just read the terms. And that was a big division within the Ethereum community, right? Where I know you guys know, but for the benefit of those at home, like who might not know, some people were saying, code is law. This person read the terms. They actually found this vulnerability and they were able to do something that the system allowed them to do. And then other people said that could not have been what people envisioned. That could not have been why people bought, because they thought that this could happen. And so there was this hard fork. And what we now know as the Ethereum blockchain was the part that said that wasn't what people expected, and actually found a way to get people their missing digital assets. Whereas the original Ethereum is now Ethereum Classic.
Yeah, Josh, thanks so much. Human element removed. Well said, Greg. Shout out to Greg. What a trooper, making it down from Toronto for the event yesterday. It was good to see you. I got to do the quick shout out to all of the folks who attended. Thank you so much. There were too many to name. But Josh, I got to say it. Shout out to Emma Channing, who couldn't make it, but we did have a drink in her name, so she was missed. at the evening's
And
cocktail.
thank you, Spencer Fain, for being one of
Yes.
the sponsors.
Fain,
And Emma.
FTI, Steptoe, so many others that I'm now forgetting. Bitwave, forgive me if I forgot someone else's name.
Eisner Amper, I think, was
Eisner Amper. We wouldn't have had coffee if it weren't for Eisner Amper. David, that got me through the day. David, I want to follow up on Josh's one last thing before we wrap, because it really also points to something that I think is important. And the word came up in conversation casually and in panels, circuit breakers came up. How much of what we're talking about is tied to the fact that crypto writ large is a 24/7, 365 market? And candidly, the TradFi is not, right? And I think the cutoff on collateral is 2 p.m., depending on what market, for example. Circuit breakers, David, will they make it? Will that be a solution in the crypto world? Or is that so against the ethos of what crypto is supposed to be that it's never going to have an opportunity to do that?
I don't want to say it's never going to happen, but I do think it's really against the ethos of crypto, and I don't see it at any time in the near future. I mean, in some ways, there are some, I would call them informal circuit breakers, in that, if you buy ETFs or if you buy products that trade on the equity markets, there are circuit breakers. So if you did buy, we'll say, the Bitcoin ETF on leverage and it moves over the weekend, I don't think you can be taken out of your position, until the markets reopen again and you have a chance to put collateral in. But in the pure crypto markets, I don't see that in the near future. I do see that the issues with oracles, or the issues that, that have come up with valuing collateral and the movements, I think they'll just continue to improve over time, and we'll have less of this sort of static in the market. But I don't see speed breakers being, circuit breakers being put in pure crypto markets.
Yeah. David, Josh, we're almost at time. We joked about it yesterday a little bit, and I don't want to talk about price predictions, David, but we got the inflation number we talked about. Shout out to Trueflation, and I think they're gauging inflation actually at 2%, David, not 3%. Yep. We're a lock on 2 interest rate cuts this year, probably 3 next year, depending. If we didn't have October, David, will we have up November?
That's a great question. I really think it's going to come down to the T word. And so I think ultimately I think the markets are really positioned for growth. But then, we did have some, tariff issues that have kind of come up with China. And I don't think it's not fair to say that they've come up, they've resurfaced. Mm-hmm. We haven't resolved our trade differences with China. And I think, if we were to get those headwinds out of the way and we were to come to a deal with China, I think things, would look really promising. But I do think, and we've talked about this before, that there was this overstatement of tariffs and what they would cause on inflation. And I think it's been borne out, month after month by the numbers and what we've been saying. And I think finally, even the mainstream media sort of walked back their view on tariff causing inflation. And one other point that I want to mention that I thought was interesting, not something that I had sort of connected the dots on, but, because there's been sort of, watching of the borders more closely, and there's been less immigration, there's been less pressure on retail, on rentals. And so the prices of rentals are starting to go down because there's just less people seeking the same amount of rentals. And that's a big core cost for, families. Everybody has housing costs one way or the other. Mm-hmm. So I think that's a piece of the inflation puzzle that's been, that we may see improvement in going forward, as there's just less demand.
All right, David, you opened this Pandora's box. I've got to go a little bit further. When we talk about tariff issues, my argument is that tariff issues really were one-time sort of occurrences that didn't percolate into prices writ large because of efficiency gains. Yeah. And the reason I say that is, and you and I spoke about this yesterday, job market kind of lackluster. I mean, not a lot of hirings, not a lot of firings, kind of puttering along. But when you look at AI and other efficiency gains, I think that's why corporations are able to absorb tariffs a bit better. But tell me if you agree or disagree.
I agree. I think there's a combination of, there's some willingness to take some of the costs on by the companies. So they're getting some productivity gains, and maybe they're giving a little back with the tariffs. But ultimately, I just think that, companies are being more, they're running more efficiently, like you said. I think that the actual costs were a little overstated, and I think that we have a strong economy that's really I can't think of the word right now, resilient. I think we have a really resilient economy. And, on the hiring side, our unemployment is still at sort of historically kind of low levels. So we are still around full employment. So I think that there are going to be ebbs and flows. But I think even now, it feels like there's been more uptick in the job market, I think, in at least our space in technology.
Sure.
That's certainly one area where, people with crypto experience or AI experience are very much in demand. And so I think, we're seeing that part of the market too.
Yep. David, Josh, we're at time. I'm going to ask the question. I'm still in recovery mode from yesterday, but I know we've all got busy weeks coming up, but the year is coming to a close quickly. Josh, what are you focused on next week? What are you going to be working on? And David, same question for you.
So next week, I will be doing a lot of work. There will also be, there's this thing called the Dart Roundtable, which is going to be in DC next week as part of, I believe, the like a side event to the GBC event. And a friend, Nina Seidler, who is kind of one of the organizers of this Dart Roundtable, which goes around the world, and I guess it's supported by the European Commission as well, was going to have this event, and because of the Capitol shutdown, they did not, there was nowhere to have it. It was going to be held at the GBA, that's what it is. Yeah. There was nowhere to hold it, so they asked if we might be willing to hold it at our Washington D.C. office, not London office, and so that's what we're doing, just hosting it there. And so I'm going to participate in that. I'm excited about it. That is on Wednesday. But yeah, what about you guys?
Mr. David, you're flying down tomorrow, I think?
So I'm here today. I'm going to a charity event tonight for Orphan Starfish, which is a charity close to dear to me and run by a good friend of mine. So I'm looking forward to that tonight. That'll be at Cipriani's downtown, which always throws great events. Brought the tuxedo up. Next week, I'll actually be back in New York for a day to attend Cahill's event. Happy to hear, Cahill's invited a number of interesting folks in our space, and I think it'll be an afternoon of interesting conversations and dialogue on DeFi and other matters. So I'll be back up here in New York for another day. So JetBlue is officially my Metro North these days.
David, I will see you next Thursday at the Cahill event. Shout out to our friends and members at Cahill. They are always amazing. Plus, they've got beautiful offices. David, I think I mentioned we're having our WSBA networking cocktails Wednesday evening. If you or Josh can join us, because I get the question every time, where are David and Josh? And go ahead, Josh.
I would love to, but I'll be in DC for that thing. Yeah. Oh, and next week is Halloween. So
interesting. So that's going to be an interesting happy hour, guys.
It's Friday, next Friday.
Right. No, I know, but knowing the happy hour people, it's going to have a Halloween theme in some way, shape, or form, Josh.
And let's hope the market gives us more treats than tricks next week.
Yes.
Yes.
Guys, thank you so much. You guys are such troopers. Really appreciate your time yesterday at the event. For everyone watching, thank you so much. If you had additional questions for Josh or David or I, send us an email, info@wsba.co. David, Josh, the other question I got last night, I wasn't even out of the venue, and I got the where are the pictures questions. We'll share pictures publicly. We'll share them with our panelists as well. Thank you both for a great time. We'll leave it there, everyone. Have a great weekend. Take care. Bye-bye.
Take care.